I'm Rhonda Schaffler with The Deal, here with Matt Porzio, Vice President of Strategy at Intralinks. Good to see you, Matt.
Thanks, Rhonda.
We're going to talk about deals, and let's start with mega deals. We'll start at the top here because we actually saw last month the best month for M&A ever, about $500 billion in deals. AT&T and Time Warner was kind of the icing on the cake in terms of the big deals. Why is the overall environment at the point where we're seeing very, very big transactions?
Yeah. Well, one thing I think we have to be careful is taking a point in time, like a month or even a quarter, and saying this is indicative of the overall market. In fact, when I look at overall deal value for 2016, the first 9 months, we're down on the order of 20%. But clearly, the mega deals grab the headlines, they get the attention, and they are very much a bellwether for the market. And seeing them come through, the AT&T Time Warner merger certainly gets the market excited. The deal market is healthy though, and that's because the number of deals that are getting done. We're able to predict with our data that for the full year of 2016, announced deals will be up a few percent.
And how about the outlook for 2017 then? Do you think we'll have more of the same?
Yeah, it's interesting. Again, we are at this point with our data, based on deals reaching due diligence and getting out into market, we're already seeing that Q1 will be strong. It'll be up on the order of 5% year over year. So that bodes well for the start of the year. Now, the question is, there's still a lot of uncertainty in the market, as you know, with our President-elect Trump here in the US and the global economy. Some of that stuff has to shake out to see what the rest of the year will look like.
And some of those concerns would be regulatory as well. We're not quite sure what the environment will be like.
Yeah, I mean, certainly, we go back to the AT&T Time Warner merger as an example. During the campaigning election process, a lot of rhetoric, a lot of the populist consensus by President-elect Trump about putting more scrutiny on these deals. The question becomes really what happens now with that administration? How much are they going to scrutinize deals? The market reacted post-election pretty favorably that, they believe that Trump will be business-minded. So we're going to have to see if that rhetoric changes. But clearly, deals like AT&T Time Warner will be under scrutiny. But again, those deals only make up about 5% of the market that go into second antitrust review anyway.
So obviously the external factors deal makers cannot control, but of what they can, we know the AT&T and Time Warner example is a sign that media TMT is undergoing transformation. So what other industries are ripe for a bit of transformation through deal making, do you think?
Yeah, it's interesting. Our own data, seeing deals move into that due diligence phase. This past quarter, we saw energy and power and real estate really show some significant growth year over year. Energy and power makes sense. There's, the issues we've seen with the pricing in oil has driven a lot of distressed activity. The larger kind of well-heeled, stable players are making plays to kind of expand their asset portfolio, which makes sense. In other areas, we're seeing healthy levels of M&A activity. Pharmaceutical, biotech, the new R&D is M&A in a lot of these areas. And I think, when we come back to media and telecom, again, AT&T Time Warner is indicative of this need to kind of combine content with a delivery mechanism. And I think you're going to see more and more of that, especially at scale.
Any particular profile of a company, or is it more an industry where you see areas of transformation?
Yeah, it's interesting. We recently did a study with Cass Business School out of London related to kind of what is the profile of a target. And we looked at 14,000 deals over almost 23 years. And it was interesting. There's kind of 6 financial measurables that have a significant impact. And when we really look down deep, things like size, profitability, and leverage really determine whether or not someone's a target. And for private companies, when you look at it, you've got that fast-growing, sort of profitable, highly levered company that people target. For public companies, it's the lower growth, lower profit, but smaller companies that they can do deals and get them done.
Matt, as you mentioned, we have some uncertainty with the markets right now, but any thoughts about what happens with valuations heading into 2017?
Yeah, I think, right, there is uncertainty, so the question becomes, in this, if things continue in a relatively stable, slow growth economy, I think you are going to see more M&A. I think the driver is, and both shareholders, boards, and executives kind of all agree now that this is the new path to growth, to innovation, to profitability. So I think you're going to see that continue. If there is a big shakeup, if we see pressure on global trade, we see a lot of currency fluctuation, that certainly can affect the M&A market. But right now, I think most deal makers are pretty confident that things will continue at this pace.
Matt Porzio, great speaking with you. Thank you so much.
Great, thanks, Rhonda.
I'm Rhonda Schaffler with The Deal.